Hello and welcome to the fifth episode of Eagle Investors Market Recap. My name is Vishu Namburi and I'm the current Chief Investment Officer here at Eagle Investors. Today is Sunday, April 19th, and in today's episode, I'll be summarizing the current fiscal and monetary measures that we've seen as a response to COVID-19. I'll be going over my outlook for crude oil from here and what we've seen this week. I'll be also going over what I'm seeing in the Dixie and the gold as well. I'll be giving a coronavirus update. We've seen a lot of news this week in terms of Gilead as well as U.S. guidelines to potentially reopen soon. I'll be also giving a market outlook, and I'll also be referencing a couple of earnings that I'm seeing coming out next week as well. In terms of market performance, the S&P 500 is down 12% year to date and is up 3.4% for the past week. So jumping into the current fiscal and monetary measures that I'm seeing as a response to COVID-19, I actually wanted to just show a quick chart of where we are at currently. So what we're seeing here in this chart, we're seeing the total assets of the Federal Reserve, and we're seeing the balance sheet reach up to $6.3 trillion this week. And I potentially see this continuing. There are reports that the balance sheet is set to continue to expand until we hit $8 trillion. And this is significant in terms of the specific fiscal policies that we'll see from here, as well as there are reports saying that it could even hit 10 trillion. And we're just seeing the Federal Reserve continue to print money and continuing to backstop the economy as well as support the stock market right here. We're seeing artificial inflation as a result of this, and this is partly the reason why we're seeing such a drastic recovery over the past couple of weeks. Now, in terms of some fiscal policies that I specifically wanted to go over, the first program I wanted to touch today was going over the money market liquidity facility. So this focuses on giving credits for particularly prime funds. Another program that I wanted to focus on as well is the Main Street New Loan Facility. And this essentially gives unsecured loans to firms with less than 10,000 employees. The Main Street New Loan Facility also expanded recently, and they're giving much more money as a result of that, and you're seeing billions of dollars being put into this program as well. Now, in terms of the Paycheck Protection Program, we recently saw this dry up. The $349 billion program guarantees loans to small businesses. And this program dried out on Wednesday, and on Thursday, the government was still trying to roll out a specific plan to reinstate this program and put more funding into the program, but we still haven't seen anything substantial yet. So next week, I would look to see the PPP program receive much more funding from here, just to provide as a backstop for small businesses, as well as potentially decreasing the number of jobless claims that we'll see from here as well. Another facility I wanted to touch on is the Term Asset-Backed Lending Facility. So this facility specifically focuses on issuing on asset-backed securities issued after March 23rd. And you're seeing a special purchase vehicle here as a result, and you're seeing specific swaps be traded, specifically the 2-year LIBOR swap and 3-year LIBOR swap as well. Now, in terms of some other facilities that I'm seeing right here is the secondary market corporate credit facility. So I talked about this a couple weeks ago, and this is just the Federal Reserve looking into investing in investment grade corporate bonds with maturities of less than 5 years, as well as U.S. listed ETFs with exposure to investment grade and high yield corporate debt as well. So like I said before, the specific ETFs are LQD and HYG. And in terms of specific responses from the government, I wanted to specifically focus on the fiscal policy phases that we've seen. So we've seen three specific phases. Phase one was the coronavirus emergency bill of $8.3 billion, and this just provided emergency funding for hospitals. Now we saw phase two program where the fiscal policy focused on providing funding for family. It was called the Families First Coronavirus Response Act, and we saw an expansion of the COVID-19 package from phase one, and it specifically targeted individuals and businesses as well. Now, the $2 trillion bill we saw was the Coronavirus Aid, Relief, and Economic Security Act, and this was $2 trillion in direct aid to businesses from small, medium, and large sizes, and it's also expanded upon the Payment Protection Program as well. Now, in terms of other things that I'm looking currently at, in terms of crude oil outlook, this past Wednesday we saw a dramatic rise in the supply of crude oil. The crude oil inventories hit 19.248 million barrels. This is significant as it's one of the highest amount of crude oil inventories we've ever seen. And you're seeing supplies increase significantly, and as a result of that, you're seeing a decrease in the oil price. We saw the oil spot hit $18.27, and I think this can continue. Even as I mentioned last week with the OPEC Plus meeting, we saw a 10 million barrel cut, but that's not significant enough considering the amount of demand that's going down as a result of the coronavirus. You're not seeing as much transportation, and transportation makes a majority of the demand for crude oil. So I believe that we could see crude oil prices to continue to go down, and we're seeing on the supply side, we're seeing a current build in crude oil as well. So as a result of this, I'm bullish on tankers specifically. I think the crude oil supply is going to keep on increasing, and we're not going to see any immediate demand for crude oil here. Another thing to mention is we're seeing more reports that we'll see a decrease in GDP. On Wednesday, we saw a report coming out from saying that the Chinese economy shrank 6.8% in quarter one as a result of the coronavirus. So we could see that same result in the United States as well, where we see a large decrease in the GDP, and we can keep on seeing a reduction in the demand as well. Now, in terms of initial jobless claims, we saw jobless claims come out at 5.245 million this week. But I believe this number can increase drastically due to the fact that the PPP loans actually drained out this week. So if these businesses aren't able to get these PPP loans, they might not be able to pay specific employees. And as a result of that, we can see an increase in jobless claims from here if we don't see something soon from the government. And these numbers are drastic, and they're set to continue if these businesses aren't able to receive funding. Now, in terms of the dollar, we saw some strength over the past week, especially since we saw investors transfer their international dollars into the U.S. market. Now, we saw some optimism within the market, especially on Friday, as we saw news that the Gilead Sciences drug was effective in treating people with the disease, but that was a small trial, as well as it wasn't anything official as of yet. And we can't, that even though that trial was optimistic, it can't be used to specifically state that the drug itself it can cure the coronavirus. President Trump also gave guidelines to open up the U.S. economy, and as a result of that, we saw the dollar do well, as well as Trump is being very aggressive with his plans to reopen the economy. But the fact that he gave guidelines doesn't mean the whole U.S. economy is opening back up. So we could potentially see investors start to realize that everything's not going to go back to normal, and we won't see that strong V-shaped recovery that everyone's expecting if many of these small businesses aren't going to be able to reopen, and we see other businesses getting hurt significantly due to the coronavirus hurting their supply chains as well. Now, in terms of the fear and greed index, we didn't see a drastic change from last week to this week. Even though we saw a large run on Friday, the index only went up to 44 from 42 last week. So there is still a lot of fear within the market, and you can also see that within the VIX index as well. The VIX index is still relatively high at 38.15, and this means that put options are still relatively expensive. And the strategies that we've been taking for our more bearish plays is to trade verticals instead of buying the outright naked puts from here. So if you buy, so what a vertical is essentially buying and selling puts for the same company on the same date of expiration. So say, for example, you're trading a stock that's currently at $100. We'll call it company XYZ, and we believe that it will go down significantly from here. So we'll buy a more expensive put, and then we'll sell a cheaper put. And by trading this vertical, we're taking on a lower risk and reward profile. And by doing this, we don't have to specifically deal with the very high premiums we're seeing in the market right here. And in terms of specific earnings that we're seeing this week, last week we saw earnings come out from multiple different banks. We saw strong earnings from the bulge banks. So we saw JP Morgan report, we saw Wells Fargo report, and from what we saw, there wasn't any significant news coming out of the banks. So we didn't see too much room in the market as a result of that. This week, we have a lot of big companies reporting as well. We have IBM, Infosys, Halliburton. Halliburton's earnings could show how the energy sector is going to do from here. We'll also see earnings from Coca-Cola on Tuesday. After market close, we'll see earnings from Netflix, Snapchat, and Chipotle as well. On Wednesday, specifically looking into Delta earnings, it'll be important to see what their guidance is and how the overall airline industry is going to do from here. After market close, Las Vegas Sands, it's going to be, I'm particularly interested in seeing their earnings just to see how the overall casino industry is going to do from here as well. Now, on Thursday, before market open, we'll see Domino's, Southwest, Lilly, and the Blackstone Group report. So these could be significant earnings as well. After market close, we'll see Intel. I'm particularly curious to see how management's going to deal with the current supply chain and if they've fixed their issues completely due to the coronavirus. Now, those are the companies that I'm specifically focusing on with the current with earnings coming up next week. Another thing that I'm looking into in particular is how the market is going to perform next week. We saw optimism at the end of the week, but I believe that optimism might not continue. I believe that we could see a temporary run up to the SPX level of 3,000 being a key ceiling, and I don't believe that it's justified to move up significantly higher from there, as we're still due to see the significant impact of the coronavirus, and I don't believe that we'll see that strong V-shaped recovery. I believe that we'll see more of a U-shaped recovery from here. There could be a potential downturn once we hit that 3,000 level, but I'm personally not buying at these high levels here unless I'm making speculative trades that are meant for holding for only the next few days. Thank you for listening to today's market recap, episode 5. Please feel free to leave any feedback in the comments down below. And if you're interested in learning more about hard currency trade strategies and interested in joining our Discord trading server, feel free to join with the link down below. You can join our Discord server for free, and you can learn about what our moderators are trading, and you can chat with us as well. Thank you, and have a great day.